Welcome back to another video. Sohail here, and today I want to teach you a very simple but highly profitable scalping strategy which is based on RSI indicator. To run this strategy successfully, you need to consider some important points which I'll explain all of them throughout this video. Just make sure you watch this video until the end so you don't miss any important point about this RSI trading strategy. Without wasting any more time, let's get started. Alright, this strategy is run on 1 minute time frame. So here we must set the chart time frame on 1 minute. This is the price chart of Bitcoin, but we can also use this strategy on any other asset, whether it's crypto, Forex, or stocks. The only requirement is that the asset must have high trading volume and liquidity on your exchange or broker, so you will not encounter any unreal price gap or large spread between buying and selling prices which are caused by insufficient order book, and this can damage your trade entry, stop loss, or take profit order. In this strategy, we use two RSI indicators. For adding indicators, here we click on indicators and we simply search the name RSI, this one, and we add 2 to our chart. Now we must adjust the settings of these two indicators so it will match our trading strategy. Please carefully watch what I'm doing because it's important to adjust, set and mix them together the way I'm gonna do. Here for the first one, we click on the settings, and for RSI length, we set it on 20, and everything else here on this tab is fine. We go to style tab and we change the color of RSI line to red and we click on OK. For the second RSI, we click on settings, and here in the inputs tab, we set the RSI length on 100. And in the style tab, we change the RSI color to blue, and we unselect everything that is selected here in this part. We click on OK. And for this RSI 100, which we already removed the bands, here we click on this 3 dots, then move to, and we click on existing pane above. By doing this, the two RSIs are mixed together. And now again for this RSI 100, we click on the 3 dots, and then in the pen to scale, we click on pen to scale A. So the two RSIs will be scaled in the same way. We must also add another indicator to our chart, which is super trend, this one, and we're going to use this super trend indicator for confirming direction of the market and setting stop loss. Everything is already set on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, now let's see how we trade based on this RSI scalping strategy. This is a trend following strategy, meaning we identify short-term trends in the market and then we try to find perfect opportunities to enter in that direction, and everything is done here by the help of this combination of RSIs that we have created. Please pay attention what we got here. We have this red line which is RSI 20. We have this yellow line which is a 14 period moving average of our RSI 20, the red line, and we have this blue line which is RSI 100. When RSI 20 is above RSI 100, in other words the red line is above the blue line, the market is considered to be bullish. And when the red line is below the blue line, the market is considered to be bearish. So when the red line is above the blue line, we must look for opening long positions, and when the red line is below the blue line, we must look for opening short positions. And for spotting trade entries, we use the red line and the yellow line. So the trade setup for opening a long position is like this. When the red line is above the blue line and at the same time the super trend is also green, which together confirm the upside direction, then we enter a long position when the red line crosses below the yellow line and then crosses above the yellow line. In other words, the red line should cross above the yellow line in a move from below the yellow line, and this gives a buy signal or a signal for opening a long position. So we enter a long position here at this point. For setting stop loss for this trade, we use super trend. We set our stop loss here just below the super trend line. And for the profit target, we set it in a way that gives risk to reward ratio equals 2. So we take our profit in a way that risk to reward ratio is 2. If we look at our indicators, we can see that the red line is still above the blue line. And at this point, where the red line is above the blue line, here crosses above the yellow line, which gives another signal for opening a long position. So we can open another long position here at this point. Similarly, the stop loss is placed just below the super trend line, and profit targets in a way that risk to reward ratio equals 2. If we look at our indicators, we can see that here at this point, we have another signal for opening a long position. Again, another one here and also another one here. Please pay attention that in times that these three lines get close to each other, like this part as you can see, and the yellow line becomes flat like the blue line, and the red line starts moving choppy on the yellow line, the risk of taking the trades are higher, and it's better not to take any trades in this situation because this shows that the market is flat. In this case, taking the trades didn't end up with any loss, but many of the times when this situation is present, the trades don't provide the expected result. So pay attention to this important point that happened here. I'll talk more about this later in this video. Moving on the chart here, at this point you can see that the red line is above the blue line, very close to it, and again crosses above the yellow line. And this gives us the signal for opening a long position. So we can open another long position at this point. The stop loss just below the super trend line, and profit target is set in a way that the risk to reward ratio equals 2. Moving forward in the chart here, again the red line goes below the yellow line, and here at this point crosses above the yellow line, which provides another signal for opening a long position here at this point. So we can open another long position here at this point. The stop loss just below the super trend line, and we set the profit targets in a way that gives a risk to reward ratio equals 2. And again, where we got another signal for opening a long position here at this point. So we can enter another long position here at this point. The stop loss just below the super trend line, and the profit target similarly in a way that gives a risk to reward ratio equals 2. All right, let me give you an important point here. As you can see here at this point, we got another signal, but please pay attention that here the red line is running on the yellow line, and this is not a good sign. When you see that the red line is running on the yellow line and then moves above the yellow line, it's better not to take the trade, especially in the times that the yellow line is also moving in a downside move. As you can see in this case, this wasn't a good trade, and opening a long position at this point would end up with loss. And when the red line is below the blue line and at the same time super trend is red, together this means the direction is down and we must look for short positions. So for spotting trade entries, we wait when the red line goes above the yellow line and then crosses below the yellow line. This gives us the signal for opening a short position. So by having this signal, we can open a short position here at this point. The stop loss for this trade is similarly placed by the help of super trend. We set it just above the super trend line. And for the profit target, also similarly, we set it in a way that gives risk to reward ratio equals 2. So we take our profit here at this point. Moving on the chart here again, while the red line is below the blue line, it goes above the yellow line and then at this point crosses below the yellow line, which gives us to open another short position. So we can open another short position here at this point. For this short position, which is opened here at this point, we set the stop loss just above the super trend line, and the profit target similarly in a way that gives a risk to reward ratio of 2. Moving on the chart, here again another signal. So we can open another short position here at this point, with the stop loss placed above the super trend line and risk to reward ratio of equals 2 for the profit target. Please pay attention that this is a trend following trading strategy. So when the market is flat, it doesn't work well and the number of false signals increase. I've already mentioned that when these three lines get close to each other and the yellow line becomes flat like the blue line and the red line starts moving choppy on the yellow line, this shows the market is moving flat, and having any signal has potentially much higher degree of risk. For example, here in this part you can see that we have buying signals or signals for opening a long position, but not the good ones because the market is moving flat. Besides checking these lines for identifying these kinds of flat situations, also you must always keep watching the price action for further confirming the situation when these lines not giving the clue in the early stages. Another important point that you must pay attention is that when the super trend changes color, give it a little time and see if the market develops in that way or not. In this situation of color changing of super trend, this strategy works well and most of the time doesn't give early signals, but if there is any, you must look at it with caution because it doesn't necessarily mean that a trend develops and the markets may go flat like this part. Anyway, entering any short position here in this part with their stop losses above the super trend line didn't end up with any loss, and actually the profit targets are finally hit. So dealing with these kinds of situations really depends on your trading style and degree of risk you're willing to take, but it's recommended to minimize your risk as much as possible, so better not to take any positions in these kinds of situations, especially if you're a beginner. And the most important aspect of this trading strategy I want to explain is risk management. I explain how the stop loss and profit targets are set in this scalping strategy, but you must also define the amount of loss on each trade if the market goes against your position. This strategy is a scalping trading strategy on 1 minute time frame, which means you're gonna trade actively in a day. You're gonna have possibly tens of tradings in a single day, and if you don't control how much you're gonna lose, you will blow up your trading account faster than what you think. Please pay attention that losing trades are part of the game and winning every single trade is impossible in reality. So besides setting stop loss to prevent unexpected losses, we must also determine if the market goes against our position, how much we're going to exactly lose. For active trading strategies like this one discussed in this video, there is a risk management strategy which is called 1% rule, and by the help of this strategy, on each trade you only lose 1% of your trading account if the market goes against you. I explained this risk management strategy very shortly here because I have a complete guide to this strategy. The link is also in the description of this video and it's highly recommended to watch it later because it's really important to manage your risk properly. Getting back to our strategy, as I said, we're gonna lose 1% of our trading account on each trade in case if the market goes against us. Consider we have a $10,000 trading account and on each trade we want to lose 1% of this, so that would be $100. Consider we want to enter a long position on Bitcoin at $30,000 and we want to set the stop loss on $29,000 for example. So here the maximum loss per coin is $1,000. Now we divide our defined maximum loss amount, which is $100, 1% of our trading account, to the maximum loss per coin, which for this trade is $1,000. The result is 0.1, which is the amount of Bitcoin that we must buy. So we buy Bitcoin worth of $3,000, nearly 1/3 of our trading account, but without any worry, because if the price goes against our position, we only lose $100, only 1% of our trading account. I recommend you to watch my video on this because there I explain everything in more details and more examples so you will better understand the whole concept of this risk management strategy. Without this 1% risk management strategy, you cannot achieve success and consistent profit with the scalping strategy I explained in this video. Please pay attention. If you're a beginner or you don't have much trading experiences, you shouldn't try this scalping strategy with real money. Scalping is not recommended for beginners because of the higher degree of risk in compared to other types of trading. Successfully scalping demands a well-developed psychology of trading and controlling emotions. So if you're not an experienced trader, I highly recommend you to practice as much as you can and start with real money only if you're consistently profitable in paper trading. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.